Okay. Good afternoon, everyone. I'm Sai Nair from Kirin Advisors. Welcome to the virtual roadshow of Nilachal Carbo Metallics Limited. Today, we will provide a brief overview of the company and its innovative business model. Nilachal Carbo Metallics Limited specializes in manufacturing low ash metallurgical coke tailored for the ferroalloy foundry and steel industries, offering grades such as foundry coke for stable casting heat, ferroalloy nut coke in uniform 10 to 30 mm and 10 to 40 mm sizes with low ash and phosphorus, and blast furnace coke with high crust strength for efficient iron making. Uh, from the management team, we have Mr. Raghu Datta Panda, the Managing Director, Mr. Rishiraj Panda, the Whole-Time Director, from Sun Capital Advisory Services Private Limited. We have Mr. Ajesh Dalal, Managing Partner. So I welcome you all to the meet. Good evening, sir. So now let's play a short AV of the company.
Good evening, everyone. Thank you for joining us for this meet, and I would like you to join me for this introduction that I'm going to give you about our plant and our facilities overall through this video. So basically, we are a metallurgical coke manufacturer, and today we have created a niche space for ourselves in the space of ferroalloy grade coke manufacturing, and along with that, today we are also manufacturing blast furnace grade coke, and we set up our first plant in 2003 in Jajpur, Odisha, and today we are operating multiple plants. And as you can see, to support this operations, we have our own fleet of trucks which support us in terms of just-in-time delivery and flexible delivery schedules to our customers who are only based 40 to 50 kilometers within our plant radius. Also, to support the entire plant operations, we have automated processes. We have engaged in R&D development, and we have developed our own screening and cutting units, and also our own movable automobile parts, as you can see. And we have developed multiple attachments to our internal R&D that engage in multiple operational models without any excess dependencies on manpower, and allowing smoother production process flow. And one of the unique value propositions when it comes to our plant is 100% concreted, and we have 1 lakh ton plus of warehousing facilities where we store our raw material, which comes from ports, our finished product, and also the byproduct generated during finishing product processing. Also, as I mentioned, we have 100% concreting, so that allows zero contamination and any wastage regarding our final product or any raw material that is to be associated during the production process. And majorly today, to support the entire process, as you can see, we have our own automated weigh bridges with capacities up to 100 tons, where these are automated, so there is no manual entry and there is no scope of pilferages or any wastage during the process. Also, to support the process today, we have our own QC and lab department, as you can see, where we operate based on ISO 9001 standards and procedures, being ISO 9001 rated company. Today, our entire plant is headed by and advised through ex Tata Steel and ex Tata Group and General Group coke plant heads. And to support them, we also have our internal team, which have been working with us for more than 15 years. To support their endeavors to our process, we have our own, as you can see, cafeteria and canteen facilities, which provides fooding 3 times a day, 24/7, 365 days. And also, we have our own executive quarters, where we house all our internal plant executives as well as operators. Today, we have established ourselves majorly in coke manufacturing through all these, and we manufacture our coke through these ovens, as you can see. These are the ovens, and these ovens totally constitute a coke oven battery. Firstly, the coal arrives from our port, as you can see, and it is unloaded in our warehousing facilities. We engage in multiple blends of multiple types of coals, which we blend and we crush and we charge into these ovens. And after 48 hours, approximately, this is how the lumps in superheated form comes out, with temperatures up to 700 to 800 degrees Celsius, and the entire process is automated without any manpower dependencies. And after this, what we do is we quench and we cool down the hot masses of coke, and we bring down the temperatures up to 200 degrees Celsius to 150 degrees Celsius, and we engage in further air drying. After which, as we had seen earlier in the video, the coke then goes to the finishing yard, where it undergoes screening and cutting processes, and then we unload and then we load it to our own fleet of trucks, and we deliver it to our customers, providing just-in-time delivery as well as flexible delivery schedule, and allowing our customers to enjoy lean inventory management practices. So thank you for joining me through this video, and I hope I clarified about what we do and how do we do it.
Okay. Thank you so much, sir. Thank you, viewers, for watching the video. So now I hand over the floor to the management so that they can tell the journey about their company. Over to you, sir.
Thank you, sir. Uh, we can start with the presentation. Now, firstly, to start with who we are, and to give a brief introduction about how what we are today in our journey. The best person to explain this would be our MD and Chairman, Mr. Vibhudatta Panda, and I'll now ask him to shed a few words and enlighten us about our journey.
Thank you, Rishi. I'm Vibhudatta Panda, Managing Director of Nilachal Carbo Metalicks Limited, and I have a 30 years experience on coal and coke. And in the initial stage, for 10 years, I was on the trade of coal and coke. Then subsequently, we came down for a greenfield project. And 2003, setting the first battery with 32 ovens. Then we went to 2005. Then we went to set up the second plant in 2005, and the third plant we set up in end of 2005. And post COVID, we set up another plant in the same on the same campus, and that was under a contractual basis. We have taken that unit under our umbrella. And also post COVID, also we took another plant in Visakhapatnam strategically as a locationally wise as under lease. So on all these together, we are now operating 1,02,000 tons per annum, our total operation of our coke plant. Basically, our major success to our growth is that we have developed a very special market share with regard to production of low phosphorus and ultra low phosphorus metallurgical coke suitable for the ferroless sector, especially for the ferrochrome producer. That is our major focus in our production line, and which we have very successfully developed. This product is an import substitute also, and we have been having it around 30% of the market share in the ferrochrome manufacturers by us. So I will request to go for the next slide, and I will request our Director of Operation Rishi to take the floor for the other details.
Start, I would just like to give a brief intro about myself as well. I'm Rishiraj Panda, whole-time director in Nilachal Carbo Metalicks. And personally speaking, I have an academic background in mechanical engineering, being an alumni of VIT Vellore 2019 batch, and also undergoing strategic management program at London School of Economics. And I've been associated with the company for the last 5 years. And my entire role has been totally today directed towards cost cutting measures and efficiency improvement measures at plant end. And that has been my entire journey throughout, and also along with working alongside the MD and chairman, who also happens to be my father. We have together traversed and we have understood the market in general today, irrespective all the volatilities, and being an established player in our space going forward. Now, today we also operate where our mother plant is, and we have our own 3 plants, and we have a long-term contractual agreement with another plant adjacent to the plant facilities. And we also have a long-term lease plant at Visakhapatnam, where we have a 18,000 per ton per annum manufacturing capacity. And we are today, for last 22 years, we have been a niche, and we have been a monopolistic identity in terms of producing ferroless grade coke, since Odisha is being the cradle of ferroalloy production, with all our customers such as Tata Steel Group, Jindal Stainless, and Shah Metallics and such have been part of the we tend to supply them on a general basis, and we have a long-term clientele relationship with them today for last 2 decades. And to shed more light about that, we can go on to the next slide. We can go to 2 more slides, please. Now, to support the management team, also more on the management team, apart from our MD and myself, we are supported strongly and advised strongly today by a excellent group of independent directors who have a rich experience in terms of steel making with major steel players such as Tata and General Group, and for the last 2 decades. And they have been a strong source of advisory for us for in terms of focusing on terms of technical improvements and any quality improvements to our production process, and allowing us to maintain our standards throughout the years. And to also support us, we have ex PSU Bank GM executives who also support us in terms of company's overall commercial and financial operations going forward. Now we can move on to the next slide. Apologies for the interruption. We can go ahead with the next slide. As I had already shed a light in terms of our product range, we have ferroalloy grade manufacturing being our strong presence in the market throughout the years and throughout the decades. On the left, as you can see, but we have also today the company is engaging in a multi-product production fashion, and today we are engaged in that manner because recently, due to Government of India imposing import restrictions on blast furnace grade coke, the product that you can see on your right, it has allowed a market opportunity today in terms of a natural demand supply gap being created for steel users requiring this product, with blast furnace grade coke in producing 1 ton of steel plays a 50 to 60% contribution in raw material usage. And due to import restrictions being placed, there was a market opportunity to be encashed because it created a product which today has a greater selling price as well as profit margin opportunity. And citing that, the company towards the end of last quarter, we decided to engage, and we decided to shift our production line to also manufacturing blast furnace grade coke, and more on that later in the slides. So I'll explain later more on how we have expanded today. We can move to the next slide. Now, in order to produce the products that we mentioned in the previous slide, we also generate this byproduct, which is coke fines. And Nilachal today boasts a byproduct which is rich in terms of being better to the general market standards, with high carbon and low phosphorus and low sulfur being its unique value proposition. And we have established a long-term supply chain relationship with major iron ore pellet manufacturers who use this product as their raw material. And we're operating today on both on East Coast and West Coast, where we are supplying this product to major clientele such as BRPL, Lloyd Steel, as well as the Vedanta Group. We can move to the next slide, please. We can move to the next slide, please. Now, as you can see, in terms of the revenue bifurcation for the last 3 fiscal years, we have been a niche, and we have been being a strong player in terms of manufacturing ferroalloys grade coke, and where we have created today a monopolistic identity and having a healthy market share that has resulted in a proper top line contribution for the last 3 fiscal years, where up to 90% of the entire top line has been contributed through ferroalloys grade coke. And also to support the top line, our byproduct sales have also been part of the process, But as you can see, in terms of the trends, in the last fiscal year, there's been a byproduct sale drop to almost 5% compared to the usual standards of 9 to 10%. And that has resulted in, because of our internal R&D and our process improvements, which have resulted in greater yield and lower byproduct generation, and automatically that has contributed to productive EBITDA numbers from last fiscal year onwards. And we also aim to contribute to those trends going forward with improved production processes through our modernization measures that we'll be undertaking post IPO. And more on that I'll be sharing later. So we can move to the next slide, please. Now, I would like all our investors today who have joined us to shed more, to focus and to understand more on this slide, where today I want to explain why the company's top line trends as well as capacity utilization numbers have taken a being consistent for the last for fiscal year 23-24, and taking a slight drop in 25 up to 10%. I would like to create this platform and use this platform to shed more light on this subject, is because today, as I mentioned earlier, in January of 25, when Government of India imposed import restrictions on finished product blast furnace grade coke imports from China and Indonesia. So that resulted in a market opportunity being created with a market size up to 10 million tons per annum. It created an organic supply chain and supply demand gap basically. And to encash that, we had to realign our production. We had to alter our production modules. We had to slow down our production basically, and we had to alter our ovens, our entire lab departments, QC departments, our production practices. We had to undergo multiple beta testing of our product, because as part of a new product development, as most of our investors would understand. And also we had to undergo multiple new vendor audits, because working with major steel players, we have to meet their demands and their requirements. And that was the total focus towards the last end of the quarter of fiscal year 25. So that resulted in this trend of capacity utilization, and in terms of slowing of production, and of course due to imposition of import restrictions, there was a trend of hoarding by a lot of traders and a lot of importers in the market prior to restrictions being placed. So company didn't want to engage in speculative inventory selling also. So we took a strategic move by slowing down our production and also altering our production to blast furnace grade coke. And today we are happy to tell all our investors and potential investors that we are all today producing blast furnace grade coke as a healthy contribution to our product range, with up to 50% to 55% involvement. And we are also producing our standard product that we always produce, is ferrous grade coke. So that today we are manufacturing in a multi-product model, and allowing eggs in multiple basket model allows us to have a strong sustainability pathway going forward, as well as blast furnace grade coke demand supply gap has created a greater selling price as well as profit margin. So EBITDA figures as well, bottom line and top line contributions going forward, and our EBITDA and all is going to have a strong boost going forward in our production process. Now we can move to the next slide. Now this is as you know, India today is second in the world when it comes to overall steel productions, being second to China, and having a strong commitment to steel production. Blast furnace grade coke is going to play a major role in the growth path, being a strong auxiliary partner to steel producers. So automatically it creates an organic market as well as organic growth path for metallurgical coke manufacturers such as us going forward. Now we can move on to the next slide. We can move 2 more slides, please. To expansion slide, please. Now to cite and to take advantage of our basically to explain more on how today we have established ourselves as a strong player and an established player in the market. I would like to shed some more light on the distinct strengths today that we have compared to standard operators in the field. One of the major reasons why today we have maintained our sustainability in the market is because we are all our raw material that comes from major ports such as Paradip are is only 70 to 85 kilometers within plant range, and we take leverage in terms of lower logistical cost inputs to our cost of production. Also, along with raw material sources being and port being so close to our plant, we also enjoy in terms of our major ferroalloy customers being next door to us, since all their raw material supply chain sources such as mines, power plant, and all are very next door to us. And today we are operating with our clientele being within 50 to 60 kilometers of our plant range, and we today supply them using our own truck fleets, allowing just-in-time delivery, allowing our customers to engage in lean inventory management practices, because they understand Nilachal being a reliable manufacturer of the product, and always being next door, they can depend upon us. And majorly in terms of operating ferroalloys grade coke is a very niche product where we have to work out with 6 to 7 different parameters. Our company's focus has always been on quality, and we operate in terms of our buyers terms, where we supply all our product based on buyers final terms of quality as well as quantity. So that because of our own confidence in our product, and today that has allowed a flexible buyer supplier relationship today, and we enjoy long term supply chain relationship with all our buyers today. And of course, during the production process of all our products, we are engaging in consistent byproduct generation, and also along with focusing on lower byproduct generation, there is still a consistent quantity to deal with. And today we have developed consistent buyers in terms of our byproduct purchases as well, which has a healthy contribution to our top line. Can we move on to the next slide? Now, as I had earlier discussed and explained to you people about blast furnace grade coke being a product of organic growth and huge demand going forward down the line to support the steel industries, and with government of India supporting regulatory changes and introducing regulatory changes to support the organic coke industry, organic growth of the coke industry in general, and to be part of that growth path and to engage in that support the government is providing today in terms of blast furnace grade coke production. And we are going to expand our existing facilities by 30% by introducing a brownfield project of 36 ovens, allowing a 36,000 ton production capacity, where we'll be setting up in our existing plant facilities. And Today, that will allow us a 30% increase to our total production capacity. It will be geared towards blast furnace grade production, and it will allow us to engage in blast furnace grade production in a basket as well. And since this product today has a greater selling price as well as greater profit margins to offer, we are producing and expanding in this space will allow us organic growth in terms of both our bottom line and top line numbers going forward. Now, to also support in terms of our overall strategy, we are also going to be engaging post IPO in aggressive modernization measures, and this will allow us basically to upgrade all our old plants that we have had till now. And also, we are going to introduce new production methods such as which will allow a stronger blast furnace grade coke production process, allowing lower quality, lower grade of coal as part of our coal blend, which will allow a lower cost of production. And of course, it will contribute to greater yield as well as capacity utilization numbers going forward down the line. And looking forward to the trends in the market as well as support and organic opportunity to provide growth, steel growth, and being a part of that journey, uh, setting up a new plant as well as aggressive modernization measures is the first priority at hand post IPO that the company is going to undertake. Can we move to the next slide, please? Now, of course, in terms of overall strategic plans, there are, of course, we have being supported by a strong body of advisors who have a strong technical understanding. The company will be obviously undertaking multiple sustainability audits as well as ESG measures, and will be undertaking and we'll be setting up multiple committees that will ensure we operate in a more efficient manner, as well as overall profitability and overall sustainability factors are taken care of down the line. And I have already shed a lot of light in terms of what our plans are going forward. And going forward, of course, we'll be engaging in more visionary plans, and we hope to share those plans in the coming years, where our entire focus and our entire commitment is to ensure the company grows organically as it has throughout the years, and ensuring we maintain our sustainability going forward, and allowing our investors to enjoy the fruits of the growth path going forward as well. We can move on to the financials now, if you can. Now, to shed some more light on the financials, I would ask Ajesh sir to speak more on the matter, please.
Sure. As Rishi explained, the company has a consistent revenue of more than 200 crore across, if you see it in last 3 years. And somewhere, EBITDA margin of 9 to 11% they are maintaining. Though their margin, revenue has, little bit came down, as Rishi explained, due to the modernization and the activity which they have carried out in financial year 2024-25. But we can see EBITDA, and as he explained, the focus on the profitability and the bottlenecking of the plant has improved despite the falling of the revenue. So company is a fundamentally sound company, have a heavy asset company, and has a established player in this field for the last 22 years. Next slide, please. So ratio, as I already explained, you can see the debt equity ratio is almost 0.3. So, the company could have even taken the loan, but since it's a good business, which we believe that, should be, investor should get the opportunity to invest. So company decided to list and raising the fund for its future growth. Next, please. Next. Next slide, please. Next.
Can we move on to issue details?
Issue
directly,
details.
please?
Yeah. So this IPO is for 66 lakh shares. Out of that, 40 lakh shares are offered for sale and 26 lakh shares are further issue. It is a fixed price issue. IPO price is 85 rupees. Issue will open on 8th of September and closing on 11th of September. Previously, we were planning on 10th, but 8th being declared as a holiday in the Mumbai, so one day has been extended, and it will be listed on 16th of the September. Minimum lot size is 3,200 shares for the retail and 1,600 shares multiple thereof. Thank you.
We can conclude the meetings if it is possible. Now, to shed more light on the objects of the issue also, I would like to mention in terms of, as I mentioned, we are setting up a new CapEx. And in terms of the CapEx of the new brownfield project, the coke plant that we are going to set up of 36,000 tons, the approx 13.5 CR will be dedicated to, and also to support the CapEx as well as with the aggressive modernization measures that we'll be undertaking. We'll be placing around 3.5 crores towards modernization measures, where we'll be introducing stamping, we'll be introducing upgradation of old plant facilities, we'll be introducing advanced screening and cutting machinery to allow quick turnaround time and quick product delivery lean time as well. And of course, the general corporate purposes, as you can see. So that would be the general gist of our objects of the issue. I would like the team to conclude the presentation, please.
Okay. Sir, we'll start with the Q&A session. So, viewers, I request you to post your questions in the comment box. So, we have a first question from Mr. Yash Mistry. He's asking what differentiates Nilachal Carbometallics from other coke manufacturers in India?
Yeah, thank you for this question. I like to say that this company has been set up from 2003, and the basic uh, difference between the other coke manufacturers and Nilachal is that we have been we have been focusing on manufacturing a special grade coke, which is been used for ferrochrome producers. For our coke has a very low phosphorus and low sulfur and low ash coke, and this is only in the today's context. Only import is the only possible source of supply, and domestically it is a very difficult product to manufacture. We have done a lot of research on this product, and to get this we have been using at least 4 to 5 coal, more than that, and with different origin of countries. So this requires a lot of R&D to get this blend done. So that has been our success story. On consistent manner, we are able to supply to the ferroless manufacturers, basically ferrochrome producers, and they require very low phosphorus and low sulfur material, which suits to their stainless steel making also. And some producers also export to Japan steel mills and POSCO also. So for that reason, they need a very stringent coke, which we are able to deliver to their required specifications. That's the reason why today we are in a sustainable manner from 2003 is going to be 22 years plus we are going through. However, we are also looking for a better margin, so we are getting into blast furnace grade coke. Thank you.
Thank you for answering that, sir. Next question. So the next question is from Miss Vasudha Shenoy. She's asking what is the current installed capacity and utilization level across your facilities?
Thank you for the question. The current installed capacity is at on Nilachal plant is 96,000 tons, and we have long-term contractual agreement with another group company adjacent to our facilities, and we have a long-term contractual agreement with them, and they have a manufacturing capacity of 24,000 tons per annum. And then along with that, we also have a leased agreement plant we're operating in Vishakhapatnam today, which is in Vizag, also as known as Vizag, also, which has a 18,000 per annum manufacturing capacity, and totaling 102,000 tons as our total manufacturing capacity in today's date. And post IPO brownfield project that we are going to set up in our own plant, existing land facilities, we are looking at a 30% increase in our overall capacity, where a 36,000 ton base plant will be set up, and will today push our overall capacity to 136,000 tons per annum. When it comes to capacity utilization, the average capacity utilization throughout our through making ferroless grade coke, and in terms of how we handle our final yield processes, we operate at a standard 65 to 66%, as you can see in terms of trends till FY24. But now I would like to also add the fact that in last year, due to the company slowing down its production to engage in new product development to manufacture blast furnace grade coke to encash the market opportunity today that we have due to regulatory support from the government. There was a decrease in the overall capacity utilization because we slowed down our production towards the end of last quarter to escape hoarding of final product by traders, because citing the import restrictions coming through, as well as in terms of new product development and developing new clientele in blast furnace grade coke today, which today the company is successfully operating, and today's company is engaging in healthy supply chain relationships with in blast furnace grade sector as well. So looking forward, since the company will be engaging in blast furnace grade coke manufacturing and the existing ferroalloy grade coke manufacturing, we'll be hoping greater capacity utilization numbers in the years to come forward. And also in terms of the modernization measures that the company will be undertaking, and with the new plant coming in, the efficiency, production efficiency obviously will go up, and that will also contribute further to the capacity utilization increase as well.
Okay. Thank you for answering that, sir. Next question. So the next question is from Ms. Shreya Desai. She's asking, what role do byproducts like coke fines play in revenue and sustainability?
So, thank you for the question. To answer you in terms of overall trends to top line contribution in coke fines, as you can see, for fiscal year 23 to 24, there was an average contribution from 9 to 10% to the top line. But in fiscal year 25, due to our own production processes and due to our internal R&D in terms of investing in the overall production process and in terms of improving our own final yield manufacturing processes, that has led to a drop of byproduct generation to almost 50% to 5% levels to top line contribution, and majorly due to a high contribution factor of byproduct was because ferroalloy grade production, which is smaller in size, as you saw, our sizes that we manufacture is 10 to 30 to 10 to 40 product range sizes. To produce those product range sizes, the gross coke has to undergo multiple cutting processes, so that leads to a healthy byproduct generation. So there was a sustainable contribution to the byproduct, but of course, in terms of final yield, it creates it chips away from the final yield as well. Now, looking forward, the company will be engaging in a healthy part of its product range will be dedicated towards blast furnace grade coke. Now, to produce blast furnace grade coke, the byproduct generation will be going down, and that will obviously contribute to greater yield as well as greater top line contribution, and of course greater bottom line as well. So look, and but the company will still be engaging, having some amount of byproduct generation, even though very minuscule, but it will be taken care of because today the company has successfully built its relationship with iron ore pellet manufacturers who use coke fines, the byproduct, as a raw material in their production process.
Thank you for answering that, sir. Next question. The next question is from Mr. Shantanu Musa. He's asking, how does your logistics fleet strengthen operational efficiency and customer delivery?
Yeah, strategically we sign all our contracts, our sell contract based on delivery basis, free on roads, FOR. So that takes care of takes care of the transit as well as the on-time delivery. So to take the advantage of our locations, basically all the plants, as already explained, all our ferroalloys plants are basically very vicinity of our plants, and we strategically we have procured a few dumpers fleets, and which go and deliver at the plant end. So that takes care of their lean inventory at their end. And the major advantage also is that this is a very high price product. So pilferage and contamination to evidence. So we use our own company dedicated fleets. So that makes them what you call quality wise, they are well delivered without any tampering. And secondly, the customer also gets on time delivery. Thirdly, we declare the whatever the product quality is declared at buyer sends the final. So that minimizes any tampering on the quality part. So what we produce, the buyer gets the same material at their end. So the fleet not only helps us in getting our material delivered on time, it also assures our quality delivery more and above. And then when we deliver on the quantity basis, so there's in case of any shortage and transit also, that's to our account. So by transporting our own fleets, the shortage factor is also not there. So that also adds another advantage to us. So that is the reason why we use major of the nearby buyers to supply through our own company fleets.
Okay, thank you for answering
What
that, sir.
we can do,
Next.
for the nearby plants, so we can do 2 3 rotations of the same fleets for a quicker delivery and bigger quantity delivery.
Okay. So the next question is from Mr. Prem Singhania. He's asking, what customer segments contribute to your top line revenues and how concentrated is your customer base?
Thank you for the question. To answer your question, as you can see, till fiscal year 25, 24, and 23, ferroalloy manufacturers they have been a major contributor to our top line, and along with up to 90% levels, and in terms of byproduct. Such as iron ore pellet manufacturers who purchase our byproduct, they have contributed up to 9 to 10% to our top line till FY24, and in FY25 also they have contributed up to 5%. Now, looking forward, the company today has also engaged in blast furnace grade coke manufacturing. So, or the blast furnace operators or steel manufacturers today they're also procuring our product on a healthy fashion, and we hope in terms of going forward, the blast furnace grade coke will, and as well as ferroalloys grade coke will play a huge role in terms of our top line contribution as customer segments is concerned. And then, if we have to talk about the concentration of the customer base, our top five customers today contribute up to 85% of our top line, and top 10, you could say, today contribute up to 98% of our top line.
Thank you for answering that, sir. Next question. So the next question is from Mr. Lakshman Dubey. He's asking, India is the world's second largest steel producer. How does steel sector growth directly influence your demand?
Yeah, this is a very good question, and you know very well that government of India understands this steel sector is having a is going to boom in the world sector, world market. So government of India has decided not to import metallurgical coke from overseas, because the Indian coke industry has to grow. As the steel industry is going to grow, and in the domestically they have to be supported by the Indian coke industries. So they have already put a quantity restriction on imports from 1st of January 2025. And as the steel sector is going to grow, and I think if you rightly know, there are a few steel plants already under expansion mode: JSW, JSPL, Jindal Stainless, then Royal Lloyd Steels, and they are under already in the expansion, and also the and this LN Mittal and LNM. So these five steel already under expansion mode, and the coke requirement is going to go up. And few steel sectors also are decided to depend on domestic coke, then of their captive coke, the merchandise coke. So we find the influence on the domestic coke of coke manufacturers will go up quite. And you know, the 50 to 60% of their input is making steel is coke. So we find when the steel industry grows, and the Indian coal steel market will also grow proportionately. Thank you.
Okay. So the next question is from Miss Diya Patel. She's asking, could you share more on the role of the promoter and management team in shaping the company's journey?
So I like to say that I have more than 30 years experience in this trade. And to start with, I was very much in the coal and coke trade, and we had come down with the greenfield project in 2003, and now we have in the 1,02,000 tons already existing, and we are going for 1,36,000 capacity. So the promoters are already in this business for 3 decades, and we got the efficiency of operating plants in the most efficiently and a very low cost manner. And secondly, we have all the infra for further growth. Like that's the reason why we have going to set up the another plant under expansion. And to support this, we have a very strong management, because all our plant heads who are currently operating the plant are ex-Tata Steel coke divisions, and some are from the Jindal coke plant retired people. So, and they are the ones who are our backbone in our growth, in our plant operations and cost reduction. And I'm proud to say that one of our director operations, Rishiraj, who has joined us for the last 5 years with us, so he has done a lot of cost cutting measures. So he has given us a new path with regard to the cost reduction on companies' efficiency running. So that's the reason why the promoters are very proud to have a dynamic director operation in our team. And over and above, we have independent directors who are already working, have more than one director, Mr. Narayan. He's having 40 years plus experience in the steel, in working in integrated steel plants. And another Mr. Amitesh Shinnaji, who is already more than 20 years, he worked in the steel sectors. He worked in Germany, one of the largest steel consultancy firm, and he was in Bahrain Steel, and he was in the Jindal Group core team. So we have people who are guiding us on all the with regard to our future growth path, and we have a lot of other future plans which we are going to plan out once after the installation of the first segment of our expansion of coke plant. So that's the reason why we have a very strong independent directors in our team. Thank you.
Thank you for answering that, sir. Next question. So the next question is from Miss Chaitanya Deshpande. She's asking, PAT margin improved to 6.96% in FY25. What key cost efficiencies contributed?
Now, thank you for the question. That's a very keen observation, by the way. And in order to answer that, I would like to list out the main factors today which has contributed to a significant PAT improvement, even if there's been a reduction in top line. So one of the major reasons why today we have improved on PAT is because, firstly, we have improved our final product processing procedures today, which has led to a lower byproduct generation, as we observed in terms of our overall top line revenue patterns, where 50% decrease in terms of our byproduct generation sales have come through, only because today we have improved our production process, where yield numbers have gone up, our own production processes have improved overall efficiency wise, and lower byproduct generation has led to higher yield numbers. Secondly, one of the major factors today in terms of our PAT and higher EBITDA numbers is because one of the major cost aspect to making our finished product is our raw material procurement. And throughout the years, the company, through its internal R&D and in terms of investment towards greater and better production measures, our raw material consumption cost was 87% in FY23, which we got down to 85% in FY24. And we are very happy to say in FY25, we have got down our raw material consumption cost up to 82%. So that has been a major contribution in terms of overall profitability being gaining some momentum. And one of the third factors being the company has also engaged in some milestone amount of blast furnace grade coke manufacturing and towards the end of last quarter. So as a result of which, blast furnace grade coke having a greater profitability margin has led to in the overall product mix, has these three main factors today has led to the PAT margins being improved up to 6.96%. And going forward, we target to operate in a similar fashion, where post IPO we are going to be undertaking modernization measures which will improve our yield further, it will improve our production capacity utilization numbers, and it will improve the overall production efficiency, and that of course will lead to trends contributing to greater PAT and EBITDA figures going forward in our journey.
Okay. Thank you for answering that, sir. Next question. The next question is from Mr. Ajay Gupta. He's asking, how do you plan to manage working capital cycles given fluctuations in raw material prices?
Basically, our internal accruals are quite strong enough to take care of our working capital cycles, and now we are operating at 55 to 60 days working capital cycles. So that is quite comfortable. Even we do not have any further plans to go for further from increasing our working capital from the banks. So the current generations of the revenues and profit, whatever we earn, will take care of our expansion plans also. And as you said rightly, there's a fluctuation of raw material, and prices. So I have to explain you that how we operate. Generally, we do not operate on the basis of coal sourcing. Basically, our major uh, our business model works on the reverse process. We first procure the orders, and though we are long-term customers, we have more than 1.5 months orders are in hand. So based on orders, we plan out our coal sourcing patterns. So we minimize our coal pricing fluctuation of our operational profit making. So we have a very stable profit on our books because of our this module of working. First, we have the order in hand. On the basis of the order books, we source our coal, and in case there is some fluctuation of coal, we change our source of coal, or we defer our coal buying and looking for another opportunity where we get a lower pricing coal. And secondly, we also hedge our dollar. So because it's an imported product and all our suppliers with whom we do business, we do all INR contracts so that any dollar fluctuation doesn't affect our operation also, and it takes care of our what you call whatever the profit calculation we have made for, and that stabilizes there. So these two factors do not affect our operation and getting the margins. Thank you.
Thank you for answering that, sir. Next question. The next question is from Miss Payal Moore. Uh, what are the major barriers to entry for new competitors in your segment?
Yeah, I like to tell this because see this journey, you will understand that we have done this journey from 2003, and if somebody has run this sector, you must have seen there are lots of ups and downs in these sectors, and lot of quite a good established sectors they have perished out because the visions are have to be very focused, and any deviation in your production process will have a major effect on your operation also. So anybody entering this market needs a very depth in the knowledge on the subject. That's the first thing. So we keep telling everyone whoever meets us, our capital is our knowledge. So that is the where we are today. We stood by from year 2003. Unless until you have a very good thorough knowledge on your coal subject and what coal to blend and what time to blend and where and how to reduce the cost, that requires a in-depth knowledge on the coal. That is a very strong fundamentally required, and it cannot be bought or it cannot be sourced. This has to be by in process of time evolution. You learn all the methods, because in the world you have so many countries have different variety of coals, and unless until you are well aware of which country which origin coals are cost effective, at the same time to be it will be also in specification wise quite perfect. So unless you do not have that knowledge, it's not possible to just to set up a coke plant. Just one plus one is not two in this coke industry, unless you do not know the subject. And secondly, today for us it is a journey of 2003. We have all the facilities there. We have our land bank, we have our infra in place, and so we have a very brighter vision for our future expansions also. We have already lined up our future plans based on our current infra. Not necessarily that we will be going 100% on coke manufacturing. We will be definitely going allied products down the line. So this is not the end of our journey only on the coke industry. Thank you.
Thank you for answering that, sir. Next question. So the next question is from Mr. Chirag Panchal. He's asking, do you see opportunities for exports in the future?
Yeah, I think if you see the recent tweet of Mr. Piyush Goyal on the 4th August 2025, he met all the major manufacturers where he had shown his inclination for the coke producers to start exporting coke. He has already banned the coke imports, so he has encouraged that coke manufacturers to start exporting. I think once this Indonesian and Chinese coke settles down, and once our product quality goes up, we don't think that we can be also a net exporter of coke also for the future times to come. I think in the COVID time, India had exported quite a good quantity of coke to China also, and so we think if the market and the Indian coke suppliers can meet the standards of the quality, I think that's quite a good opportunity to supply coke to the Middle East and other countries. Thank you.
Thank you for answering that, sir. Next question. So the next question is from Mr. Prem Singhania. He's asking, how will the expansion funded by IPO proceeds affect financial leverage and ROCE?
Sure, thank you. I would like to answer this question. Uh, See, the fresh issue of IPO is for 26 lakh shares. So company will get approximate 21 crore. Out of that, whatever the net proceeds is, it will be used as Rishi explained during his discussion. Uh, One for the setup of the approximate 34 metric ton per annum line and for modernization. So uh, after this, presently, even if we see the debt equity ratio is just zero point 0.3, post this further, this amount when will be added into the net worth of the company, the leverage ratio will be less than or approximate zero point 0.2. Uh, ROC, of course, as Rishi mentioned that going forward due to this bottlenecking and the expansion and modernization which the company is proposing, we hope we cannot give any figure, of course, futuristic figure, but we are optimistic and hopeful that it will improve their ROC in the long time. Thank you.
Thank you for answering that, sir. Next question. So the next question is from Mr. Vedant Shetty. He's asking, how do government initiatives such as Gati Shakti and Make in India impact your business prospects?
Currently, I think we are not working on those. We are not taking and cashing those incentives because this is a bulk commodity production. So, and in the coke industry, I think these incentives have not been much of been utilized by the this coke manufacturing sector. And maybe government of India may give some relaxation in how to get these benefits. And being the 100% import base, and definitely say Indian, and I think the PSUs are making India concept. They are giving preference to the Indian coke manufacturers, and there are some manufacturers who are supplying to PSUs under the banner of Make in India.
Thank you for answering that, sir. Next question. The next question is from Mr. Prem Singhania. He's asking, how do your leased and contract manufacturing facilities contribute strategically to the business model?
Then basically the lease plans we have strategically taken at Visakhapatnam, what is called Vizag, and with the two major reasons that it is very close to the port and hardly 35 kilometers from the port. So we get a better logistic support from in our input cost. And secondly, all our southern-based customers, which we have been catering from Orissa, so our logistic cost is a little high. So that takes care of again saving a lot of money from supplying from our Visakhapatnam facilities. So these are two reasons why we took that Visakhapatnam under lease to have our input cost reductions, and at the same time we have a higher margin by supplying to the nearby southern customers. And with the contractual thing, this we have a long-term contractual facility on the same campus, so that also attributes to our adding to our production facilities, so that we do not have to take the lease in some other plants or go for further expansion. So that takes care of our requirement of to meet our customers' demands from the contractual manufacturing facilities, which is under the same near on the same campus. So this is the reason why we have gone for contractual manufacturing, only because of our demand for supply to our buyers. So that's the reason we had to get into the contractual manufacturing facilities.
Thank you for answering that, sir. Next question. So the next question is from Mr. Shantanu Oza. He's asking, what is your strategy to diversify customer concentration given 97% revenues come from top 10 clients?
Thank you for the question. To answer briefly about this query, I would like to say given till FY25, 97% contribution was from top 10 clientele. But again, that was in one single product that we were talking about, which is ferroalloys grade product, ferroalloys grade coke. The company enjoying a monopolistic presence as a producer in ferroalloys grade coke today has allowed to have such a concentrated and such a long-term supply chain relationship today. Uh, to further our sustainability in this regard, today the company is also manufacturing a new product, and today we are forwarded into blast furnace grade coke manufacturing. So as a result of which today we are operating in a multi-product fashion, where we are also manufacturing our existing product, which is ferroalloys grade coke, but we are also manufacturing blast furnace grade coke as well, a product which has a greater selling price as well as greater bottom line opportunity, and that has led to today the company in a strong position where we have a greater spread of our customers and in larger number of in a multi-product fashion. So this will assure us a more operating in a more sustainable fashion going forward.
Thank you for answering that, sir. The next question is from Ms. Kipti Yadav. She's asking what logistical advantage do the company's plants enjoy due to their locations?
See, I said because we are based in Orissa, and Orissa being the mother of all the minerals, and our focus was basically to the ferrochrome producers. I kept saying that, and where our plant Jajpur is the one of the India's largest, world's largest deposit of ferrochrome ores, and all the ferrochrome producers are also very close to the mines, and they also are captive mines owners, and they're producers also. So that gives a very logical for us to set up a plant very close to the buyers. And Mr. Rishi also have been telling repeatedly that our plants are under 50 to 100 kilometer radius. So definitely we took that advantage of our location, and our input of raw material which comes from Paradip port is hardly 80 to 90 kilos roughly, and so that advantage also we have. So location wise we have both. Our inward raw material comes very from the close port, and our buyers also are very close by. So we locationally one of the best advantages plant based in this location, in this sector. Thank you.
Thank you for answering that, sir. Next question. So Prem Singhania says, "Thank you for answering all my questions. Wish you all the very best for the IPO."
Thank you in all investors. We look
Thank you.
forward to be part of our
Yeah,
journey, and we assure you
yeah.
that we will be definitely going our expansion path and our journey of growth, and we assure you that we will be honestly working for the growth of all of you. Thank you.
Thank you so
Thank
much.
you, everyone, and all the best for the IPO, sir.
Thank you.
Thank you.
Thank you so much.
Thank you.